I'm normally not a technical analyst, but we've done a whole lot of covering the fundamentals on this channel. And there's an important notion that we feature in the title of this video that I think is quite relevant to the broader stock market. That's the notion of stocks taking the elevator on the way down and the stairs on the way up. And I'm seeing signs that we're taking the stairs. Now, that doesn't mean that all charts look the same, that stocks go up, go flat, go up, go flat. What it really means is that when stocks go down, they move down very aggressively. And when they move up less aggressively. And I think we've seen quite dramatic downside over the past couple of weeks. So maybe that's a message that's going to resonate with you. But as you may know, I think the fundamentals are holding up better than the market is pricing in. And after having been bearish for some time, having been short 20-year treasuries, which have been completely taken off as of a couple weeks ago, as of having SPY puts, which were sold at a very solid gain, but now gone, that were due to expire last Friday, but sold them a couple weeks ago, I am now constructive on the market from the current level. And as I said at the beginning of the video, I'm not a technical analyst, but there are some chart-based things that I am looking at that may indicate a bottom is in. The first one of those things is the notion that we've been trading below 3,900 for several days in the past 9 days, but haven't been able to close below 3,900. It seems that the 3,900 mark has some psychological significance. And I think the fact that we're not able to close below it indicates that there is some selling exhaustion. The way I see it, we get to 3,900, we see that 38 handle in the market, and the last people to sell decide to panic sell their entire portfolio. And there's only so few of those people left. We see continued downside. All of a sudden, they've done their selling for the day, there's no more sellers left, and then all there's left is buyers. So the market just slowly trickles up. We've had that happen several days now in a very short period of time. I think the more that happens, the higher level of confidence we have to have when looking at it. So I'm seeing some optimism around that, and I like what I'm seeing. So I think that's a pretty good sign. The next, if you look at the image on this video, you'll see that I have taken the S&P 500 weekly chart and flipped it on its head. I did this earlier today before the close, but pretty close to the close. Around 2:30, I've got some, had a little bit of dry lip, got some stuff there, nothing crazy. Anyways, it's making a pretty interesting inverse head and shoulders pattern. I said yesterday when the futures are down on Twitter, wake me up when we break Friday's low. We did not break Friday's low. We broke it on ARK. Hold that thought. We broke it on ARK. We did not break it on the Qs. We did not break it on the S&P. We did not break it on the Dow, etc., etc., etc. Not even on the NASDAQ. What's the significance of that? And what does ARK have to do with any of that? Well, you would think if ARK broke that level and ARK was at new lows, new year-to-date lows, which Friday was year-to-date lows, that would be concerning because, well, that means there's a whole lot left to be drained out. If ARK is setting to new lows and everything's not, besides that, that's concerning. Well, ARK actually hit new lows several days ago and has since maintained some level of bounce. So, ARK hit new lows. ARK may have put in a bottom. It's not violating that bottom today or yesterday or Friday. The rest of the market is making very nice head and shoulders, indicating that, okay, maybe the broader market's selling is exhausted. Let's not forget, ARK topped over a year ago, almost a year and a half ago. It's been basically a year and a half of drawdown, down tremendously to 4 year ago levels, close to the bottom of March 2020, I think we have hit a bottom. I'm not calling a bottom. I'm saying it has already occurred. I think. I have reason to believe this based on everything I've talked about. I've talked about the fundamentals. I've reiterated what basically everyone who has direct access to the fundamentals in the economy is saying, and is not a stock person, which is the consumer remains strong. I don't really know anyone who runs a company or is very involved in the company that says the consumer is not strong. Okay, you want to talk about Snapchat? As far as I'm concerned, we're spending less time at home, most of us. And if we're spending less time at home, we're going to the office, we're going to school, we're on social media less. In addition, we're seeing less spending. Doesn't mean it's a bad thing. We saw less spending in different areas, spending shifts. We're seeing less spending on goods. What are the primary items advertised on social media products? They are goods. Stuff you buy at Target, Walmart. Those stocks, CEOs of those companies, Target and Walmart, said the consumer is quite strong. We're seeing Nordstrom do very well today, beat revenue expectations, barely missed earnings expectations for last quarter, but more importantly, raised guidance for the rest of the year. I'm seeing plenty of optimistic signs. I think the fundamentals are not as dramatic as the stock market is warranting. And yes, they aren't as great as they were when we were getting stimulus and in last year's situation. But I think the drawdown more than compensates for that. And it's okay to buy stocks. Well-selected stocks that you like and that you're willing to just hold. You got to be patient. I'm not calling for a mega rally. I don't know what's going to happen tomorrow. I don't know what's going to happen next week. What I think is the bottom's in. The market can't seem to close below 3,900. It seems to have these massive drawdowns during the day and then rallies from levels that bottom. And we can't break 3,900 on a closing basis. It's happened several times now. You know, if there was really so much more selling left to be had, it would be happening. We would be closing below 3,900. But I don't think the selling is that intense. I think there's plenty of buyer hesitancy. We know that. Cash level's the highest since 9/11. But I think there's also seller exhaustion. So one is going to break first, and I think it's the incredible cash levels on the sidelines. So that's today's video. We'll see what happens. And until next time, peace out.